Hello and welcome. You're watching BT TV. I'm Tanya Aneja. We are here at Motilal Oswal Roundtable, and I'm joined by Prateek Agrawal, who is the Executive Director at Motilal Oswal AMC. Thank you so much, sir, first of all, for taking the time out. And my first question to you would be around high quality, high growth, style of investing, because we were discussing about that. So if you could tell us more about this style of investing to our viewers.
No, sure. So, very simply put, we believe stock price performance follows earnings growth. So the higher it is, the better, and for alpha. So the whole thought is, if for the index 100 rupee EPS becomes 115, 130, and so on, and for our portfolio, if the same thing goes at 100 to 125 to 150, that delta growth should result in outperformance, okay, over a period of time. Now, the higher growth should be of the sustainable variety. What is sustainable is what can be funded by the company itself, mostly through internal cash generation. And if you really want to extend it, if at the start point they have some cash on book. So, which is how, high quality and high growth go hand in hand. You cannot have sustainable high growth unless you have high quality. And the more you think of it, having a combination is rare. It is not something which is available in plenty. And that is what makes this style very interesting. But very easy to understand, if the valuations are similar, valuations in the manner we see for the index and for us, and for if the portfolio earnings growth is significantly higher than that of the index, the outcomes for the investors should be better.
Okay, absolutely got that, sir. And you spoke about flexi cap and mid cap funds and how mid cap funds have performed really well in the past few months. But experts are now saying that people are buying momentum and PE expansion in the mid cap space. So I want to understand from you that will the momentum sustain going forward, or is the space little overheated at this point in time?
Yeah. No, so if you look at the construct of the market, we really believe the large cap valuation seems sustainable. 18.5 time 1 year forward earnings, I think, is a sustainable number. There is some room there. And yes, mid caps versus large, if we see the trading history, are trading at a premium. However, if you also see which part of the market is offering you higher growth in earnings, versus the larger cap part of the market, the mid cap part is offering an order higher growth in earnings, because a lot of the growth themes that we are talking about are more represented in the mid and the small part of the marketplace. So yes, at any point in time, we can have a correction, and corrections in mid and small tend to be larger than what you see in larger part of the market. But my thought is, unless the growth trajectory of the country worsens for some unknown reason, the same spaces could do very well next time market has another peak. So this is the space which is best addressed through continuous small inflows, through SIPs, for example, in a structured manner. And I think this is how Indian population is approaching this space. So on a monthly inflow that comes in a mutual fund, a lot of it is through SIPs. And 50-60% of that is in the mid and small part of the market. I think the investors are doing a great job there. So that is the thought. I really believe mid cap premium over large is sustainable given the higher growth momentum there.
Okay. And what about some other themes as well? Because we talked about mid cap and small cap, but any other themes that you're bullish on going forward, and especially ahead of the general elections?
No, so I think one manner of inoculating against the election uncertainty is to be invested into parts of the market which are good for the country. And whatever be the outcomes, the policy tailwinds to these spaces will continue. So if we believe, for example, that indigenization is a long period theme, we cannot be dependent on imports of everything forever. For events like COVID, when sourcing it from abroad is not possible. For events like geopolitics, when you need something you simply may not get. So in spaces like defense, in spaces like engineering, etc., I think the country wants to build up substantial capacity and capability. I think companies which are nicely positioned there should see a very long runway of growth. Similarly, we like spaces like new tech, where the part where part of the life cycle where they were happy making more and more losses has changed into at least their public commitments of wanting to make profits in the foreseeable future and delivered trajectory towards the same. I think a long period themes, unless they are disrupted by a new incumbent, etc., which can always happen there. Something that we believe are not influenced by the election outcomes. Similarly, anything which goes into China plus one, and now if you see financials, lenders, people who are able to lend at a good pace, so AUM increases if it is of a higher order. So we say, small ticket focused banks in BFCs, where AUM growth is of a higher percentage, are spaces to look at where policy doesn't change direction. These are things, which feed into the India growth story very well.
And lastly, sir, talking about the earnings only, what do you make of the second quarter earnings and your outlook for the rest of the financial year?
Yeah, so second quarter earnings were better than expected on all cohorts. So you take index as a whole, numbers were better than expected. You take broad market that any broker is covering, numbers were better than expected. Now you knock off commodities and oil and refining, what is left, numbers were better than expected, and so on. So at the end of the quarter, what we have got is brokers either sustaining with their earnings outlook for the year or improving on it. Now, this is a change that you are seeing. Earlier, for several years, I think up to 21, we would start the year with a particular thought on earnings, and as the year progressed, we would see earnings cut happening. Over last few quarters, we are seeing, people sustaining their beginning of the year projections, which actually also gives you the strength in the economy, the fact that margins are coming back to corporate India. So on that, I would say the pulse check is very good.
Okay, absolutely. On that wonderful note, thank you so much, sir. Thank you.
If you like the video, do like, comment, share and subscribe.